What is going on YouTube? Welcome back to another video. Now in the last one, I was telling you guys that pain is coming for the stock market, and we saw how Friday's session went, guys. It was chaos in the markets, but you already know I had to take full advantage of that with the team over at the Discord, all right? So check it with me. Told the guys I'm entering into Wells Fargo puts, and those things were printing on Friday's session, right? Ton of the guys managed to walk away with $1,000 plus wins, right? 60% or something around those levels of a win on those option plays. So guys, we're going to continue to see volatility in these markets. There's going to be continued downwards pressure. We're going to see upwards movements. We're going to see downwards pressure. But if you're in the options game, you can make a lot of money. And you guys know I come on here pretty much each and every day and share with you guys what's going on behind the scenes and what we are doing in the background. And I kid you guys not, since the beginning of 2022, we haven't actually had a losing week for those who are over in the option plays with me over at the Discord, right? It's been win after win after win. And I want to see as many of you guys win and make money in these markets. So if you haven't already, get yourself down to the Discord. Link is in the description below, right? I've got a system, I've got a strategy that works in these markets, and we have a lot of fun over there in doing so, all right? So make sure you guys tap in, link in the description below. All right, guys, so chaos on Friday's session, saw a ton of red in the markets across the board. I was telling you guys, I was very much expecting that, right? That's why I hopped on late on Thursday to drop that video for you guys, just to prepare you for what we saw on Friday's session. But in this video, I want to talk about a couple of things. One of them being, I've had a lot of questions about selling, okay? This selling all. I've seen some titles out there on socials, people selling all their portfolios and things like that. And I want to give you guys my take on that. And I think, guys, this is all just a lot of hype. It's all for the clicks, it's all for the views, it's all for the ad revenue by putting the most shocking title out there. I've sold everything I own, I'm selling because I'm expecting a big market crash, okay? If you look at some of the smartest people in the world, some of the richest people in the world, what are they doing, right? If you look at a Charlie Munger, if you look at a Bill Ackman, right, billionaires in their own right, they've actually been buying into stocks that they have an interest in. They found a price point and they've snapped it up, okay? Charlie with that Alibaba sell a couple of weeks back, Bill Ackman with that Netflix purchase a couple of weeks back as well, guys. I think I said Charlie Munger sell. Charlie Munger bought Alibaba, right? Just to clear that up for you guys. So we're seeing billionaires put money to work in these markets, buying into names. Now, personally, I'm not a big fan of both of those. I think they both got issues in their own right, but what we're seeing them is spend cash, guys. We're seeing them put money into the markets, buying into the stocks. So I'm not for this sell everything type of thing. I told you guys, when we get these rallies in the markets, you can use that as an opportunity to go ahead, trim some of your position. All right, a couple of sessions ago when the market was hot, I told you guys, you can use that as an opportunity to exit some of the positions that you don't want to be in any longer, right? You don't see that positive thesis paying out, so you could take whatever. If you have gains, if you're at break even, if you're at a loss, whatever the case may be, you can use that as an opportunity to go ahead and exit. So I'm not for this all sell thing. That's just hype. That's just is what it is. So I want to talk to you guys about the positives in these markets, right? It's super easy to just think about, okay, high levels of inflation, interest rates going up, you know, Russia, Ukraine. It's very easy to just fixate on that, but then you actually forget the other side, right? The positive of what's going on, because there are positives that will play out over the next couple of quarters towards the back end of this year, and that will affect the markets. So if we just look at earnings is a massive driver of stock price movement, and we're seeing earnings, some are good, some are bad, okay? It's just all over the place right now. So, but quality names out there are still delivering good earnings. A lot of other stocks that aren't quality in that quality bracket, they're struggling. A lot of stocks are getting exposed. A lot of management teams are being exposed right now, but we're also getting good exposure to the quality names. They're able to deliver growth, show they've delivered growth, they're able to post up good guidance, and looking like they're going to continue to grow through the rest of the year, right? So that is a positive in its own right. Earnings season has been good to quality names out there in the markets. That's key. Next thing is this inflation situation. As we progress through the year, that should ease off, and that should give a little bit of relief two companies. That's another positive. So when they start reporting their earnings towards the back end of the year, I'm expecting some better numbers, right? Some improvement, which should help their stock prices. It's all about thinking ahead, guys. And not only that, the whole virus situation, that's cooling down, that's easing off. We're seeing restrictions being lifted, and we're seeing that feed through into some of the earnings out there. If you look at like a Disney's earnings, they're pretty good. If you look at an Expedia earnings, they were also pretty good. Now we should get some positive earnings from other companies that benefit from that easing of the virus situation, and we should continue to see that play out. So these are positives. These are reasons to not back away from the stock market. And that's what a lot of people are doing. What amateurs are doing who can't handle the heat of the market are backing away right now. So I'm all for continuing to buy in, but got to keep it smart, got to keep it tactical. Really and truly, there's two ways you can go ahead and buy into stocks. You can either buy into the speculative stuff, or you could buy into the stuff where they've got more of a safety net, where there's less risk attached. Now, I'm very much focused on buying into stocks which are more on the safe side of things. The more risky stuff, the stuff that was popping in 2020, popping in 2021, that had that community around it, they're still pretty treacherous places to be in the market, in my opinion. Those types of stuff that are like $12, $13 right now, you could easily see those go under 10 as we continue forward, okay? One thing is, when you're gonna go invest into stocks, I always look at it as building a house, okay? If you're building a house, what do you need? You need the land, you need that foundation before you go ahead, build the structure, and then you get all the interior inside. What a lot of people have done is they got all the interior, they got all the furniture, but they've got no place to house it and they got no land. So what's the land? What's the foundation? That's just a solid ETF, right? Grab yourself an SP 500, open up a Vanguard if you haven't already done so. Start doing that, automatic payments once every month, the first of the month. Get a schedule going, and that will compound over time. Now is a great time to be looking into that, given the fact that we've seen the SP 500 cool off its highs. And right now, obviously, it's looking like it's in deep waters, but it's trending in a decent level. If you look at the technicals between that 100 and 200 day moving average, that's where it's sitting right now. I don't want to go too technical on this video, but it's sitting at a decent place to be buying in. So that's what I'm going to be looking into doing next week in the markets. Now, I've been buying into this for a while, but I'm gonna add to the position. That's what I do. I continue to buy in. Okay, so this is the type of level where, if you guys haven't already, open up that Vanguard, get your foundation built. Okay, that's key. SP 500, you already know, gives you access to the top 500 companies in America. Now, I'm not going to come on here and talk to you. I rarely talk to you guys about ETFs or SP 500. Quite frankly, I think it's boring and I think it's easy to do. But in a time like this, just a reminder for you guys to go ahead and get yourself a position in that, continue to build that out. Okay, even though we're in volatile times, that has stood the test of time. That has generated returns if you look back for decades, and I don't think anything is going to change moving forward. So just a reminder, you guys, get your foundation built within your SP 500s, open up your Vanguard. Very easy to do so. All right, so that's my take. I just wanted to come on here, drop some jewels for you guys. Obviously, in this type of market, the way I'm making money is for the option side of things. The stocks are going to continue to just be treacherous. You're going to continue to see movements up, you're going to continue to see movements down. But it's the option side of things where you can make a lot of money utilizing the volatility that we have got in the markets right now. So for those of you guys who are not in the options, I definitely recommend you take a look at it, open up some accounts if you haven't already done so, and start getting into some of these option plays, because that's the way to make money in the markets right now, the serious money in the markets right now, while stocks are being very volatile and doing some price discovery and figuring out exactly what they want to be doing over the next couple of months. Right, 2022, I expect much of the same as we continue forward. Back in the year, I might get some movement up. As a matter of fact, my expectation for the overall market is probably a flat to low single-digit return by the end of the year. We've had good returns over the last 2 years. It's going to be a very much a normalizing year, a kind of cool down year. 0 to 5% is my expectation. So I'm not expecting a great deal from the stock market, but regardless, I'm expecting continued wins as it relates to the option plays, right? So that's what I've got for you guys. You guys go ahead, enjoy your Saturday, drop down some comments below, and I'll catch you guys on the next one.